Hello, this is Brian Rezny, president of Rezny Wealth Management. It's question and answer day. And one of the questions that's coming up quite often on my TV and radio show is about, are we in a recession? Is the market going to drop even lower from what we had, let's say, 6 weeks ago? Are we going to rebound from that? You know, what's really going to happen? A lot of people remember 2008 when overall the equity market dropped well over 50% if you look at the S&P 500. If you go back, the next big drop before that was really in the year of 2002 timeframe, where again the markets dropped on average about 50%. World markets, some dropped more, some dropped a little less, but let's say on average about 50% on most of the indexes. So are we going to be headed for that this time? I would say no. Now, while we have definitely some slower things happening in the U.S. economy and definitely slower things around the world, I do not see a 2000 or 2008 type recession. We may go into a mild recession, a somewhat of a slowdown, but I don't see really a major pullback where unemployment really spikes up to 6.5% or 7%. That I do not see at all. May it tick up a little bit? Maybe, but remember, we've got more jobs out there right now than people to fill them. So that's obviously a huge plus. If people do get laid off, there's other jobs maybe they can get filtered into. So what I would say is this: I would expect a mild slowdown as we get into next year, nothing drastic. I really don't expect to retest the lows in the overall equity market, at least in the U.S., anytime soon. And I would say, if best, we have a mild recession next year. And mild recessions usually could have a 20% pullback to 25% pullback in the equity markets. We've already had that. In fact, parts of the market actually have already pulled back 70, 80, 90%. Those would be the garbage stocks you never want to own in the first place. Things like Peloton, and I've talked about companies like that before. So what I would say is this: as long as it's money you don't need today, and you really don't need it for the next 3 years, you're a long-term investor. If you could buy right now 10 or 20% cheaper than you could, let's say, a couple years ago, put that money to work, because you don't need it for the next 3 years. You can let that money grow. Now, sure, you might put the money to work today and buy at a discount of 10 or 20% of good investments you like. And sure, maybe it goes back down some more, but you still already bought it cheaper than you would have a few years ago. So anytime you can buy something on sale, maybe you don't get the lowest sale price, but a sales price in general is better than maybe re-entering investments in 6 months or a year that are already at new highs and you missed the boat. Remember, methodically investing, especially when things have been temporarily on sale, is a great way to add to a portfolio, or reposition your portfolio. Get rid of garbage that should have never been there in the first place. Put it in assets that truly have earnings and have a growth opportunity over the next 3 years. You'll probably be a very happy investor. If you're not a client of our firm, you should become a client of Rezny Wealth Management. Give us a call at the office or visit our website, reznywealth.com, and click on that consultation tab. Have yourself a safe and profitable day.